Welcome to the Crypto Teacher Stock Channel. And guys, please like and subscribe. If you do like what you're listening to, please inform your friends and family and spread it all over social media. It is imperative that we get back to learning finances and understand how the world really works. Because once we understand how the world really works, we understand that everything is planned out. Now, of course, guys, I'm going to go over the funny article first. A new strain of the C word has been found. And it even has the EU in the name, guys. This is amazing. Now, remember, guys, they spent billions and billions and billions of dollars on Operation Warp Speed. Instead of giving that money to the people, they gave it to the big corporations, guys. Now, what do we see in the market during the day as far as with the market trading? Big tech raised the actual market. That's all the articles you saw. Now, basically, we had the big tech reporting after hours. I went over this, guys. Google, Amazon, Apple, Facebook, and Twitter. And we're going to go over this, so therefore we know how to play this. Now, Apple was trading above, then after hours earnings, the actual stock went down. Now, we know Apple has $191 billion in the cash sitting on the sidelines. So, guys, we know this stock is going to be going right back up. So definitely doing the play as far as with the election, we definitely want to play this. Now we know Tuesday, what does the Fed do? They cut checks. It's also voting. It's going to be turbulence. But what happens Wednesday and Thursday, guys? That's right. The Fed meets, guys. And when the Fed meets, the market is always stable, guys. So we're definitely going to play that. But I'm going to get into this further. Now we have Twitter. Stock was up during the day. Earnings, they beat earnings, guys. Stock went down. So we know this is nothing but the Fed playing it. So we know what? We're going to get into Twitter. I'm not your financial advisor. This is not financial advice. But Twitter is going to go right back up. It took a hit, but we all know it beat earnings. It should have went up. Didn't make any sense. But we know the Fed are pumping and dumping these stocks. Now, we had Amazon report growth of 37%, guys. We know Amazon, as far as a business, wasn't making any money. We know the cloud was the only side that was making money. The cloud business was up 29%. So we know, guys, what? When everybody was sitting at home doing nothing, what were they doing? Ordering from Amazon. So, of course, that was an easy play. Now, guys, the holidays are coming up. The gaming stocks, of course, Activision, Blizzard, and Take-Two. I'm not going to get in now. Me personally, I'm going to wait for the actual first quarter earnings because I know during the holidays they're going to automatically go up. Right now, the gaming stocks are almost topped out, but just like I said, they're definitely going to come down with this little correction we get. And then basically, of course, they're going to head back up. But I know when first quarter earnings hit, I definitely know they're going to get a spike. Because as we know, we're going to be moving into this virtual reality. Now, we have Exxon to cut 14,000 jobs. Remember, I went over the consolidation inside of our legacy oil market. They're going to be moving over to renewables, guys. Make sure you're making a play on that. Remember, I told you. Remember, I'm not your financial advisor. It's not financial advice, but play on those renewables. Now, airline stocks went up today, guys. As we know, due to the C word, they've taken a hit. But I'm telling you, once they pass this stimulus, airline stocks are going to go through the roof because people still are flying. You can go look at the bookings, guys. They're still flying. Of course, your news media is reporting the opposite, but no, they're definitely booking flights. Now, we have Walmart turns 4 stores into e-commerce laboratories as online sales surge. That's another play that I'm going to wait until the first quarter because we all know Walmart, Target, all of them are going to have big quarters, fourth quarter, guys. Right now, they're the only game in town. Kids will be going back to school, guys, and that is definitely the play, Target and Walmart. Plus UPS and FedEx, because of course they're going to be delivering all those items. Right now, they're definitely playing Santa Claus right now. Now, lastly, guys, going over yield rates. Yield rates went up. That's the real reason why after markets, guys, the stock market went down. Plain and simple. Always keep your eyes on the fundamentals. Remember I tell you, the VIX yield rates is going to tell you everything beforehand. But guys, all I have for you. Don't forget to like and subscribe and spread this channel everywhere. You have a wonderful day.
We need to consider how vulnerable these companies are every single quarter. So let's delve into them in light of tonight's earnings reports, even though I think that they weren't that significant, except for one company. Alphabet, the parent of Google, was the one company that did something very unusual. They delivered a huge top and bottom line beat, and that sent the stock soaring. Much stronger than expected advertising business, real strength in the Google Cloud, which they're breaking out the valuation of. I always expect Alphabet to somehow drop the ball and scare people. But they didn't this time. It didn't happen. YouTube looks great. This is, as of today, a new Alphabet. Hey, listen, it was up the least of all these. As for Amazon, they obliterated the estimates. What do you even say about a company that earned more than $12 per share? Wall Street was looking for $7.48. I mean, much higher than expected sales. It's ludicrous to see the stock go down big, 37% year over year. The only real blemish, though, while the guidance for the next quarter was strong, their operating income forecast was a little bit light, which is why the stock got dinged a bit after hours. You know what? There was this thing. It was called COVID. It cost them like $4 billion. I mean, don't you, when you have all those employees, don't you think you have more expenses from COVID? Thank you. Facebook, another huge top and bottom line beat, 22% revenue growth. If you thought the boycott would hurt them, think again. Looks like their advertising business is on fire. I love Instagram Shops, what they're doing for small business. CFO David Wenner says that we should expect even faster growth next quarter, although there might be some headwinds in 2021. For now, though, Facebook's looking really good. And what they're doing for the small businessman is never talked about. It's pretty phenomenal. Okay, so how about this one? Is this the worm in the apple? Oh, I like that. Now, finally, there is what we have behind me, okay? Apple is getting hit in after hours, despite reporting a solid top and bottom line beat. iPhone sales were weak, but you've got to keep in mind that this was the last quarter before maybe their most important iteration comes out, the 12, 4 different models. All of the carriers are subsidizing them aggressively. 5G. Now, based on the first 5 days of shipping data, CEO Tim Cook is feeling optimistic. Apple's launching a new subscription bundle on Friday. We know the service business is on fire. 585 million subscribers across the company's various platforms. I think the pullback here is a buying opportunity, especially with the 5G launch and the fact that the company didn't skip a beat, even though they didn't have a new phone. That's amazing. And the services business, that is growing like a weed, and they can do it. These guys, the world's their oyster. Oh, they didn't give guidance. Oh, yeah, well, why don't you get me an epidemiologist? They know more. I mean, I got a professor of aerosol at UCSD that knows more than what Tim Cook can possibly say, because it's about COVID. Why give a forecast? I mean, unless Tim's taking epidemiology at night or something. Okay, here's the bottom line. After hearing from nearly all the big tech names, the idea that these stocks are somehow ridiculously expensive and dangerous, to me, that's insane. In most cases, the earnings estimates were way too low. That's exactly what you'd expect from the best-of-breed companies that are growing into their enormous market capitalizations